Greetings, this is Jeff Scott. It is November 12th, 2017. 4:30 p.m. is when I'm recording this, and therefore futures are not yet available. For those who can't hear me well, I apologize. I'm having some mic issues. I'm going to have to buy a new mic. And the other thing to say is I'm going to try to make this one a little bit shorter because I've got some things tonight to get done. I titled today Rising Risk. I think you hear about that constantly on TV, versus seasonality, kind of Godzilla versus the Thing, good versus bad, evil versus wonderful, because we've got reasons to think on both sides, and I'll show you what I mean. As always, this is for education purposes only. Any recommendations are in the spirit of education, not investment advice. I am a doctor, not a broker. I am independent. That means I have paid for all these tools, just like you do. No one pays me to say good or bad things about anybody, and trading involves risk. You and your loan are solely responsible for any decisions you make. And if I talk about options, I want to emphasize that they're considered to be of even higher risk, and you should consult the Options Industry Council for their great disclaimers, written and live education. I entitle my education Be Your Own Guru. One should not necessarily just copy a smart person, but you should become your own smart person by learning from many, picking the best of, and coming together with your own style. I started with Canceling with O'Neill, certainly improved my morale and catcher, and Ian Woodward did a great job of working with George Roberts of highgrowstock.com software to give us a web-based, an online-based and in fact, server-based on your own computer tool to help us implement much of what's taught by O'Neill and the Canceling followers. Woodward Brown Investments was Ian Woodward and Ron Brown. Ron still with us. Unfortunately, Ian is not, and Ron has some great education. This is George Lee. He's got something, I think, this weekend or next out west. He's a great teacher. Van Tharp, the king of money management and position sizing, and my buddy, John Person, who's a great teacher, trader, software developer, written some great books. He's now doing a lot with algo trading. But what I like about his algo trading, it basically shows a great way of using his indicators and how well you can do with them. So this is where some of the things I learned. You could throw in a little bit of Alexander Elder, John Bollinger, and others that over the years I've participated in their education, learned from them. And what I do is a conglomeration of all of that as I became my own guru. Speaking of John, and this will be the last time you see this because we're now getting close, John has a 3-day event November 30th through December 2nd in lovely South Florida where we live, Palm Beach Gardens, at the Palm Beach Gardens Hilton. If you have interest, I am not affiliated with this, although I'll be speaking there. Call John's office at 561-694-5833 or go and visit their website at personsplanet.com. I, however, am also having an event on December 3rd. Now, I have to update this for this week. Another good week in the market. That's actual dollar return, not just one trade. I used to do this more often. I've tried very much to copy from and learn from Ian, and this is the only live meeting this year. It's December 3rd. It's a one-day meeting. I got to tell you, the last week we've had a bunch of old timers. And I'll say his name because most of us haven't seen him in a while. Manu and the Thinkorswim HGSi resident script master Bob Meager just informed me that they're going to come down. Bob, all the way from California. Another 7 or 8 are folks that used to come to the HGSi meeting. I'm so excited to see everybody, as well as a smattering of others. I'm going to talk about how I use the tools and strategies that have led me to a 7-figure return this year, where I really merged my learnings from Ian and John Person. And the way I trade, I'm not tied to my computer during the day. I could cut it to an hour a night, and I do when I'm busy. And I do this while I'm working full-time building another company. The topics, HGS principles is learned from Ian, finding my A-trade, managing trade stops, position size, my favorite option plays, setting up my scans, and putting it all together. Housekeeping will be at the Palm Beach Garden Hilton Garden Inn. Cost $400 if you're attending the JP meeting. If not, it's $500. I've increased it a little bit. Breakfast and lunch will be provided. Saturday night dinner will be over the top for those that are there, including your spouse. And each attendee will receive MP4 videos of each presentation, as well as slides and PDFs. And I have a hard drive full of material that I will share with you, including my previous seminars. I have had many questions about, can I just buy the content and the videos? I've actually decided to do that on a limited basis. So if you're unable to attend, please reach out to me. There's not a discount over the live meeting because I refuse to penalize the people who came live. And anybody reaches out to me, there's some other interesting news that may make it even more, I don't want to say more better because that's betting, more of a value to you. But looking forward to seeing those people that are coming live. And as one of the prior attendees said, they'll miss all my jokes, bantering, and the comments I make if you're not sitting there. And there's truth to that. And I will make it worth the while of anybody that did come out, and looking forward to it. What I need in my desert isle, I have a lot of programs. I need TradeStation and Thinkorswim. They're mutually exclusive in my book, specifically Radar Screen on TradeStation and the Scanner Intramarket on Thinkorswim. HGSi is my analytics program I like to use, and EdgeRater automates a lot of the projects I do. I'll talk about seasonality, but I'll probably just look at one screen from EdgeRater, which to me told the story. And the websites, those are some of the ones that I like to use. Speaking of websites, here's the HGSi website. I am independent, so I'm not affiliated. Free 30-day trial, no credit card. Under investing strategies, you'll see some stuff, hundreds of videos from Ron Brown and I, and a smattering from others. Stock patterns are cyclical. When I show you the major market indexes, they all look like they're over here in this right shoulder where it says sell sign. Now, the problem is they've done this over the last year at least half a dozen times, and what seems to follow that is a turn to the upside. So I've been very careful on giving up and saying it's over, but eventually it will be over. Bulls don't continue forever. Topping is a process, while bottoming is an event. I'm just a little bit cautious here, and I'll watch and respond to what the market does. You need to know what the market's doing, and we'll talk a lot about why this is so important in top-down investing at my meeting. I look at where the market is, and when I see that I'm concerned that we're in uncertainty, that means I raise cash. I take smaller positions, less positions, and usually sell premium way out of the money to buffet any kind of a drop. I also buy puts when I get nervous on some of my larger positions. I'm on the verge of that. I have not done that yet, although I still had some post-earnings puts on Netflix, which helped as Netflix dropped below the strike price. If I look at the sector review from Friday, if you look, you should notice a couple of things. Energy was weak on Friday for the most part, except for some of the solars. Financials were weak, despite the fact that interest rates were rising. Bank of America, probably the sole winner in the big banks. It was up a nickel. Industrials were mixed. Staples strong. Retail actually looked interesting this past week. Maybe it's because of the holiday season. Utilities weak. Healthcare outside biotech very weak. Biotech mixed at best. Foreign markets were weak. They've been strong in the past. So this looks a little different, and the strongest group still, or one of the strengths still remains in semiconductors. Major markets tell the story. Let's just go look at the real charts so I can talk through some of my thoughts. All right, so let's make this big. It's still, you know what, I always switch it to weekly, and I need to get back to daily. Takes 1 second. Anything you see in Thinkorswim, I will share freely with people that come to the meeting. Anything that I do or have, how I set up my charts, because I think I have very few, if any, proprietary indicators. And you know, Bob is always great and allows me to give out, Bob Meager, a huge set of his indicators as goodie bags to the attendees. And you'll get that whether you're live or not. This is a pattern you're going to see. Big uptrend, starting to roll over here, still in great shape, price above the 17, the 50, and the 200 moving average. High reached earlier in the week. The LBV is turned down. Is this just going to be another one of these gradual pullbacks into the 17? Is it going to be a little deeper into the 50, or do we just take off on Monday? I don't know. You don't know. I think the important thing to know is it seems like it's slowing down, but it's early. These are the E-minis. If I look at the NQs, same pattern, peaked early in the day on Thursday, sold off the rest of the day, and down day on Friday, although not that much so. If I look at the YMs, they've actually been going sideways now for the better part of a couple of weeks. So those two slowing down. And then the Russell, which had been a big move up, you can see it set its high back here in the beginning of October and is now pulled back to the 50, which will be a natural place to see a bounce. If it fails to hold the 50, then perhaps, and it's about 4%, 4.5% down to get to the 200. The VIX, interesting, VIX had a buy signal this week. Its daily bongo went green. In fact, on Friday, the VIX had a positive force, pocket pivots, and a mobile breakout. Strong VIX can't be good for the market, so something else to be aware of. And the dollar pulling back some. Now, I like looking at some of these on a weekly basis, hence why it was sitting in weekly. And what I wanted to share with you is, let's just look very quickly. And I do this every night. I got to change these somehow. That is all thanks to Thinkorswim for deciding not to give us some of the futures because they became expensive. Although I don't blame them, I didn't want to pay for them. Notice we set highs out for the year, all-time highs on the week on the E-minis, a doji on the weekly on Friday for the week, kind of a doji on the NASDAQ. So these to me are pausing, all-time high on the week. YM, all-time high, also a doji. A new sell signal on the Russell, which I said has been the weakest. The VIX on the weekly looks fine. And then the dollar on the weekly, we'll see if it comes back and retest the 200. So now, unlike the last couple of weeks where I've said everything looks strong, I think we're in a pause mode on several of these, and I'm going to have to keep an eye on that VIX. And then I like this view here, which has daily on top, weekly in the middle, monthly on the bottom, and it has E-minis, NASDAQ, Russells, NYSE, and the Dow futures. And you can see that on a monthly basis, everything is strong. On a weekly basis, the Russells clearly turned over. And on a daily basis, we're starting to see a little bit of topping-like activity. Rates were higher on the week. You can see this little line here. So I'm surprised that the banks were down on the weekend on Friday, but I think Bank of America did okay over the week. So higher rates will be good for banks. AD lines, that's the white line crossing down here on the yellow. These are small stocks. These are big stocks, clearly weaker on the small stocks. If I look at rates, oh, did I kill one of my favorite slides? Okay, all right, I'll come back to that. Now I'm going to look at it right now. So that's the rates. There's the AD line. All right, so here's the AD line pulling back more on the small stocks than the large stocks. And then here is the NYSE AD line, and notice how it's taken a sharp turn. This is back a ways. I think we're now talking a couple weeks back, and you can see how the IWM has fallen the hardest. So AD lines reversing can't be good for the market, and the ones that have seem to be taking the blunt of it and doing the worst here are the small stocks. Breadth weakens. You could see stocks above the 200 and above the 40 have dropped some this week. The 3-month new high-low actually pulled down a little bit further this week. That's my very short term. It's not a reversal till it gets down here, so anything that's in the middle. The daily McClellan, it's basically not at an extreme, but both the oscillator and the summation index have dropped below. On the weekly, you see the same thing. Still going higher on the indexes, not doing much down here, which tells me we've got some breadth issues. Speaking of breadth issues, on the S&P 1500, we now have 54% of the stocks are below the midline on their Bollinger Bands. And then if we look at the buckets, this is probably the most bearish it's looked at in weeks, where you can see very few stocks are above the Bollinger Band. A lot, or not a lot, but nearly 8% are below. When this 8 gets to be about 20, I know the market's going higher, but until then, we are in chop. Hindis. Boy, this was a Hindi week. We had Monday, the Friday prior to this week, and then on Wednesday had Hindis on the NYSE, and we had a number of Hindis on the NASDAQ. The Hindis fire at times when the market is at high risk, and they show a lot of new highs and new lows and lots of volume. And to me, it's the pros are selling out, the amateurs like us are buying, and it could signal a market top. That's something that I am concerned about. But I'll let the market start to drop before I start to go heavy to the downside. Market tone never really got to a strong green, even during the bullish phase we were in. We were clearly in chop with red, green, and yellow. And on the sectors, only sectors that are positive are energy, and I suspect that's technology. Canaries in the coal mine, some of the largest stocks in the market listed up here. FANG plus, pull back into the 50. Weekly bond goes red. We'll see if that 50 holds. I was nice. I said stalling. Same thing on the index with a lot of stocks that I put together a couple months ago as leaders of this market, with the expectation the market would, these would roll over before the market died. Market still hasn't died yet, and they haven't rolled over. Know your news and earnings. This comes from Bloomberg. Here's the reference. Monday doesn't look too busy. We got a lot of Fed heads speaking. CPI, retail sales, Atlanta Fed, energy. Thursday, you got your jobless claims, Philly Fed, more Fed heads. And then Friday, housing starts, retail, Kansas City manufacturing, and Baker Hughes. Moderate news this week, nothing heavy. If I come back over here on the earnings, some of our favorites, JD, TJ Maxx, TJX, Home Depot, Home Depot, Limited Brands, Cisco, NetEase, Target, Best Buy, Ross Stores, Walmart, Applied Materials. A lot of big stocks with earnings this week, a little bit slower perhaps than the last 2 weeks. Market thoughts. One is, I'm not talking about my bad breath, I'm talking about market breadth. All right. Market breadth is narrowing. They appear to me, charts look like they're topping, but topping is a process, and don't jump before you look. Multiple Hindi sightings on the NASDAQ and NYSE must be concerning. DC tax battle looming may cause some big news shakes as we wonder if we'll get it this year. But this is the year of positive seasonality. Markets are just under their all-time highs. And just remember, it's never different this time. If you ever think it's different, then you're probably right before the market changes direction. A correction is inevitable. However, no one knows whether it has just started or will be a Q1 event. My expectation is that if we pull back here, my expectation means my guesstimate, and then I trade what we actually get. My guesstimate is that we don't get a big correction until the new year. We'll do my top-down agenda, but like I said, I'm going to probably go on the short side tonight, which I don't think that'll make too many people unhappy. I need to save this to today's date, which is And again, just before I get off of it, if you have interest in my seminar and you're unable to attend live, it's probably worth an email. I'll tell you some options. It will never be this full Monty. You'll never get the same things you're going to get live, but to popular demand, I've made an offering. All right, let's take a look in TradeStation real quick at the major markets. And those who've been here before know that I use a couple of different things. I use 6 points. Number one, daily, weekly, and monthly charts. Am I in an uptrend, downtrend, buy signal, sell signal? I start with a percent buy signal. Long, long, long. So I'm in a long, intermediate, short-term buy, but that's Amazon, and that's also kind of a toppy chart, but let's go back here. So here's the E-mini, green, green, and green. So we're long the market. Second thing, paint bars, blue, blue, and blue. Red means I should be short or hold, but I shouldn't be buying. Green means long or hold, but I shouldn't be selling. And blue is neutral. This is from Alexander Elder, and it's his impulse indicator. Third thing is I'm looking at red dots on the top or green dots on the bottom, and this would be evidence of MACD divergence. On the bottom, it would be convergence. On the top, it's red and it's bearish. On the bottom, it's green and it's bullish. So we've got green arrows, we're blue, so we're slowing down. Fourth thing, am I in between the envelope or above it? So we've come back into the envelope, so that's less worrisome. My high jump is at about 50%. That doesn't give me a signal. My daily bongo's gone green, but my weekly bongo, which is underneath, is green, which tells me I can still be long, although again, as we've said several times, it looks like it's tiring. So ES less strong than it was, but still strong. NASDAQ, very quickly. Buy, buy, buy. MACD divergence on the daily and on the weekly, still at the top of the envelope, 70% all green. Looks stronger, also looks susceptible to a mild pullback here. The YMs will look a lot like the S&Ps, except, hey, look at this. The YMs have a new sell signal. They're out of the envelope with blue and MACD divergence on the weekly. The high jump has turned down. Weekly bond goes green. So of the three, the Dow will be the weakest and already has a sell signal, which is concerning. And then lastly, the Russell 2000, which is in a totally different scenario. Red in a sell signal, weekly sell, still monthly buy. Weekly bongo is red. So the Russell is clearly the weakest and is not a place that I would be going long now. And one of my holdings here is I'm short TNA, and we'll see how long before I cover that. The VIX, as we said, it had looked like it was ready to move up, and you could see on Thursday it had a person buy signal, gapped up on Friday, weekly buy, monthly neutral, at least on the color, it's still in a sell signal here, sell signal here. Weekly bongo went green. So the VIX to me looks like it goes higher from here, but the VIX could be down at the end of the day tomorrow after a spike early in the day. And lastly, the dollar. Under pressure here. And then if the dollar's under pressure, does that mean gold looks better? Sometimes it does, but not always. And gold's still red. Well, it's a red bar, but it's in a daily buy, but a weekly sell. So gold's still in kind of a choppy area. So I finished this and I feel even more concerned about the market. Not rolled over, not time to bail, but especially small stocks look weak here. HGSi, I'll go down to the user groups, go down to the Woodward and Brown groups, highlight Major Markets Plus, hit the warehouse view, and I can see a number of the major indexes, and I'm going to put the top down, and it's going to rank them by how they did over 1 day, and then 5 days, and then 3 weeks. The strength has been in the NASDAQ, the weakness in the NYSE and small caps. Interesting. And then even the big cap 100 in the 2000s. So the NASDAQ is an aberration. And based upon Friday, it was probably biotech and semiconductors that's keeping it up there. So very quickly, just to show how I look at the same things in HGSi, I'm using my view here. That's 8, 1750, and 200. I've added bongos and Hindis. You can see the Hindis fired here. And let me give it some more stuff. So one thing we can see, beautiful uptrend, way above the 50. High jump bar is not too high. You know, it's tired. It's pulled back. And just the question is how long it's going to pull back before the next uptrend. S&P 500 still pulling back. Dow Jones Industrial, ditto. NASDAQ, no. It's at the 8-day exponential, looks healthier than the others, but it too is, has a history of returning back to these major indices. And the Russell 2000 should be the weakest of the bunch. And you can see it's pulled all the way back to the 50. Think about that. For the NASDAQ to pull back to the 50, which is not out of the question, it will someday happen for sure. It would have to travel 200 points and 3%. Is a 3 to 5% anything that would be unusual here? And I would say no. And the S&P gets down there in 2%. So we really have been living the life of good from the major markets, and wouldn't be more than 2 or 3% to pull us down here, which might be great because then we can launch again. The dollar here uses a UPP ETFs, and you could see the dollar had a big move up here and has pulled back a little bit, sort of in chop. The VIX had a big day on Friday, as you could see here, with a kahuna, and the weekly bond goes green. The VIX is, it's kind of looking like it did over here before it launched. We'll have to see over here before it launched. And then let's just look at gold and silver. Chopland, silver, more of the same. So I feel concerned about the market. I think that the small stocks by far are the weakest, so that might impact on my choice of where I might consider shorting or buying protection. Now let's look at industry groups. So highlight industry groups, hit warehouse. You see we have 174. And let's look at 2-day force up. I've got 35, while 2-day force down, I've got 11. So even though I'm concerned about the market, there's still more of the upside than downside on the groups. Very quickly on the downside, integrated oils, that's oil services, that's interesting. Utilities, that's interesting. And healthcare, generic pharma, life sciences, you got life insurance. These are things that are weak over the last couple of days. 5-day down, 51, 5-day up, 35. So it's almost as if over the intermediate term we're weaker, but short term there was some strength. That's interesting. Let's look at the 2-day force up groups. There's biotech and semiconductors, specialty pharma, and then there's department stores, specialty apparel, footwear. And there's your exploration. That's where some of the strength is. So what I typically do at this point is I change the index group and I look at the stocks that are above the index group. Here's a cheap stock that I probably just pass on. No information, but trades a lot. China recycling. That's a big move with a kahuna. And then I want to go down to my webinar view, which adds a bunch. So I got my bongos up here. I got the Hindis there. I'm going to make that smaller because I know what they are already. Weekly bongo. daily bongo. Then I have the world famous high jump bar, followed by the 13-day force, followed by 2-day force, followed by the high jump bar. When it gets up to the top, that's a place to take a pause, followed by squeeze and mobile breakout. This gray line, this is not a great chart to show it on, is the industry group line. The red is a 200-day simple, the blue is a 50-day simple, the green is a 17-day simple, the magenta is an 8-day exponential. Down here are my pocket pivots. This is OBV with the moving average. And then the lower thing is regular volume with kahunas and with kahunas up in blue and down in red. And this down here would be phoenixes, which are exuberance to the downside. Green would be eurekas, which are exuberance to the upside. GE, hard to get excited here. It did have a pocket pivot on Friday and a PSAR reversal, pays a 4.7% dividend, and that's something that people might think is at risk. Then I don't usually go down behind the group. Second is biotech. Biotech was interesting. These are, well, you got Gilead's big, but a lot of the big guys were weak. Now, some of these I like more than others. This is Sage, don't know a thing about them. I know they had a Bible gap up on Thursday, closed near the highs on Friday. Did have a kahuna to the downside on Friday. I have no idea what I would do with that because it's really closed flat on the day. Turned to green on the weekly. Does not make money. It's a speculative based upon news play. Don't like that. Immunomedics. This is a they have some cancer drugs and others. They do not make money. They trade 2.6 million a day. They have a market cap of 1.8 billion. Nice uptrend, pullback, and now broke above the 50 with a kahuna and a mobile breakout from a squeeze. I did look hard at this one. I passed, but this is not unreasonable looking. Juno is one that I own, and this is a little flag and a break above it. I think this goes higher from here if the market holds up. Aniline, a similar pattern, breaking out, a little bit more expensive stock. Gilead once was a royalty, and it's pulled back all the way to 200. I'd like to see it have some momentum before I buy it. It's not there. Insights, another one that's been hammered. Sangamo, a nice pullback. Got to get above the 50, but looks reasonable. And one that I might be chasing this week, two of them. One's Insumed. Again, does not make any money. Market cap of 2.4 billion. So it's a pre-clinical company. It had a Bible gap up, and it's hold the gap. 50-day caught up, had some pocket pivots and a kahuna and a mobile breakout. This one looks like it wants to go higher. And the other one that I thought was interesting looking was Kura, which broke out of a high base here with pocket pivots, two kahunas, a mobile breakout from a squeeze. And then probably the investment of the bunch, not the trade, would be Celgene, which is, it could still go lower, but at some point, the value guys have to say, man, I can get Celgene at $100 a share, I'm in. It is a long-term holding for many people. Hit a right click, then left back. Semiconductor devices, boy, these have been good. Oh my goodness. And we talk about them every week, so hopefully you own a bunch. NVIDIA, what can you say? It had good earnings, scared a little bit during the report, but really has done well. Lower left, upper right, lots of pocket pivots, a kahuna, a mobile breakout, 250. All right, now it's at 216. That's $30, another 10%, 15% run in here. Micron, very similar chart pattern. A little bit of a sideways, pocket pivots. This one looks like it wants to go higher. Coherent, this was one of mine this week that had just a major pop on earnings. Gotta like that. Look at the strength of the industry group. AAOI, I owned it up here. I thought I was smart, and I had 95 80, put spread on, and the damn stock gapped down, opened up around 72. So I had puts on, which helped. The benefit of a spread is it reduces the cost of insurance. The problem is it also increases your deductible and limits how much coverage you have. I've been out of it ever since this day. I've been teased in days like this. Is it time to get back in? I ask myself again, is it time to get back in? I'd like to see it move up a little bit more. I love the earnings per share growth, and the group is obviously strong. Universal Display, I think, is in the same group as Coherent. Super strong stock, too far for me. IIVI, kind of loosey-goosey, but looks like it's breaking out here. Qualcomm, there's a bid from AVGO Broadcom that came in. It popped, and now it's flagging. Cypress Semiconductor, nice steady eddy, a little intermediate to loose to me at all-time highs with great earnings per share. So within the semiconductor space, there's something for everybody. E-commerce discretionary, I don't know what's going on with Overstock, but it had a great move here. Maybe it's on earnings. I like buying on the pullbacks. I don't like buying when the high jump bar is up at the top. We'll learn all about the high jump bar and give you some code for that for TradeStation during the meeting. Alibaba, 25 billion in sales on singles days. That's freaking crazy. Beautiful uptrend. Looks like it's going to just continue, but it's getting long in the tooth. And Wayfair was a darling, and now it's a disaster. But is it putting in a base here? It's a little early. It did have a kahuna. So typically, I'll go through the top 10. We'll look at specialty pharma, and then then some of the retail. Amoros is one that I have. This is one of those small biotechs that doesn't do much, make much money, makes a little bit. Certainly doesn't have any earnings. And this one was in a great uptrend, fallen angel, and moved up on news. If you right click and go to more info from the web and go to FinViz, why did it go up? Top line growth and earnings. Valiant, I just say one picture and I shut up. Yep, Valiant. It may take a decade to go back to reach its old highs, if ever. It's spitting off assets to pay debt. Hard for me to get excited. Endo looks lousy. Nectar's been a nice story here. Nice gap up here and continues to move higher. Does not have earnings. Another early stage biotech. So there's something going on in the biotech, and I really like this chart on Collegium. I always like to look at a weekly and see where it's come from. And you can see it's sold off. Kind of had a 1, 2, almost three touches. Breaking out here. Group strength is strong. I may take a flyer on that. I haven't decided. I haven't even looked if it's optional. So I typically will go through the top 10 groups. I did want just to look at some of the retail, because there's some things here that I like, several of them in the top groups. TJ Maxx, way down in the pattern, way below the 200. 2 pocket pivots and a kahuna. Something's going on here, but it's not my favorite. L Brands, I like this because its downtrend persists, but where it's failed on the attempt here, it actually broke above the 200. It's been up there a couple of days. Everything is green. That looks interesting. Canada Goose is an IPO. The Gap looks like it wants to make another run here. My target might be to get back up here to 30. Pocket pivots and kahunas. Mobile breakout from a squeeze. Ross Stores earnings are out this week. Also looks like it wants to run. Lululemon, similar pattern. American Eagle Outfitters is a cheapie, similar pattern. When I start to see this in a whole sector, I start to think that maybe something's changing, and retail, maybe it's moving back in favor. So the other thing I just want to review with everybody is don't forget you have to go into Files, Manage Group Subscriptions, and make sure you check off Top 50s and My Name. And if you do that, you're going to get the automated scans that will come out every day. Under Smart Groups, under My Name or others, you can see my 3x big volume. You can see pull back to the 50 with a Kahuna. So any of these make my buy list today? Not really. And then one of my favorites, Squeezing Potential, PSAI reversal. Let's see if any of these I liked. I didn't look at any of these, but typically we'll find a stock that's squeezing to be in this group. That's a takeout. Never mind. I found some really good winners in this group before. I'm looking for stocks that are squeezing, that are right below the PSAR dot, and I'm ready to break out. This one's too far below the 200. And then the other thing to point out, and more importantly, is under the custom groups, HGSi top 50, and just hit the warehouse. And these are the top 50 stocks in HGSi. Many of these we've already looked at, and I typically every night will scan through those. If I'm curious about what industry groups they're in, I might go into this and go down to industry group. Actually, let's go to sector and see what sectors have the most of these stocks. And you can see technology has 34%, discretionary is second, discretionary second, healthcare is third, and energy is fourth. Sort of consistent with what we saw earlier. So I look at these stocks and I put together my buy list for the weekend. Before I do that, I'm always checking to make sure that I'm not way out of sync of the market. And the way I do that is called group performance. And it's right here, tools, group performance analysis. And I'm always going to check. So this week would have been from Friday the 3rd to Friday the 10th. I choose a group. I usually go and I pick. Well, I've already changed it to 12th, but the groups that I had last week. And then I look at how everybody did. So I did that here. And let's see if I can find it for you. And this is how the market did last week. And I learned a lot from this report. I learned that there's a lot of positive, more than the negative, despite what you might hear on TV. My buy watch was up 1.5%. My own holdings were not so good. They were up 0.5%. S&P 500, though, was down 0.21. The weekend review was down 0.24. MarketSmith 250 was down 0.66. CanSlim's great. I think you can do better than just plain CanSlim, and that's the types of things that I do. And not that you should necessarily buy what I thought was interesting or even follow what I think is interesting, but these are the groups that made my buy watch this week. And you'll see some of the same stocks that we talked about before. Some energy things that we didn't see, and some things like Hawaiian are just looking at something that is so beaten up and wondering when's the right time to get in. And when I see this big kahuna in a pocket pivot, but I know that this is bottom fishing, and I know that bottom fishing carries a lot of risk. And in fact, I had a number of bottom fishing stocks that looked interesting today. I mean, China Mobile, does it go up with the new iPhone X? I love my iPhone X. Similar, multiple kahunas on a stock that's at the bottom. To me, it's a low risk buy. I come in. I would do this on TradeStation, but just to give you a sense. I'm not letting it drop below that point. It's not even 52. I'm putting a 4% risk in on this stock, maybe down to 50, 49.95. I like making a play there. Maybe I get it up to 54, which would be good in options. Maybe it breaks out. Who knows? But that's what I like to do. So on that note, I'm going to say goodbye. Um, leave you with this for the last second. If you can come, love to have you. If you want to talk to me about other options, there's my contact information. Those of you that have paid will get something later tonight with the 2 scheduled web updates and the rest to follow. Bye.